A splendid evening it is to viewers. Welcome to Equity News on Equityaxis, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios in Harare. I'm Ibn Mabunda. Let's get on to business. Tonight we start by having a weekly roundup where we have a look at the stories that we did cover during the course of the week. To get right onto it, on Monday, PG Industries is dropped from the Zimbabwe Stock Exchange after suspension in 2016, as well as major restructuring as an Indian investor took significant shareholding in the firm. On the same day, Willdale, which is a listed brick manufacturer, the only listed brick manufacturer that we have on the ZSE, buys back its redeemable preference shares to the tune of $3.2 million due for conversion in June of 2019. These, of course, were issued in 2014 as the firm sought to restructure its business as well as get money to get back into business. That, of course, has yielded for the corporation and has brought them from the red back into the black. On Tuesday, improved performance across all segments boosts Zimpla's revenue. Wednesday, Econet Distributed Power Africa launches new solar plant in Woolerville, which was worth $23 million. Of course, the plant is expected to generate 180 megawatts of power. Zimbabwe demands 1,500 megawatts of power and only is able to produce just 1,100 megawatts in that regard. So we need more of these, and positive there from Distributed Power Africa. Meanwhile, IMF issues a world economic outlook and expects a 3.3 GDP percentage growth for sub-Saharan Africa, meanwhile explaining an expectation of a negative 5.2 GDP for Zimbabwe. At the same time, also highlighting that Zimbabwean inflation is expected to reach 40% in as far as headline inflation is concerned. Thursday, retailers bemoan dryness of foreign currency on the interbank market system. Moving on to today, the president of the Confederation of Zimbabwean Industries, Mr. Sifelani Jabangwe, has called upon local industry to be patient with the interbank market system. The CZI is the country's largest industry body with over 200 companies under its wings. Speaking to Equityaxis, Mr. Jabangwe expressed optimism on the interbank system and said that the interbank would be more fluid with time and benefit the economy as a whole. Let's have a listen.
So don't be too impatient. This is a policy measure that's less than a month. That's actually more just a month and a few days old. Those trades that are happening to now happen on this interbank platform. And we believe that once that starts to happen and there's more confidence, there is a very strong chance that there will be an increased supply from people that are trading outside, from some that are have money under pillows and so forth, to start bringing that money out, and particularly like we're saying, money that's coming from the diaspora, to bring it out, and it will improve the liquidity on the interbank market. So really we are on the right path. It has taken us a long time to get to where we are now, but we can by continuing to fine-tune the system, particularly in this case by, we believe, really working on the pricing. We can and communicating. Perhaps it may not be just be the pricing. We also need to communicate with the sellers who we know, and understand what is it that's giving them discomfort about the market. What can be done on that market to enable them to come and sell their proceeds on the official market.
I realize.
Also not be too impatient.
Well, asked about the varying GDP projections, IMF says negative 5.2, World Bank says 3.7, government says 3.1%, while the African Development Bank says 4.2. He said that, well, we can expect GDP decline as a result of the El Nino effect as well as the cyclone. However, he called upon industries to ramp up their production so as to register a growth in terms of the Zimbabwean economy. Again, let's have a look.
Not be too impatient. This is a policy measure that's less than a month. That's actually more just a month and a few days old. Those trades that are happening to now happen on this
Now,
sector.
to talk about the recent IMF just issued a report, and according to the report, Zimbabwe is expected to have a 5.2% decline in terms of the GDP, against what government is set a target of 3.1%, or should I say an estimation in that regard. What is your comment where that is concerned?
This is most likely, I think, a result of several things, which some of which are unfortunate for this time of the year that we are for the year. One is the critical one is the drought, the impending drought, which will result in an adverse effect on the agricultural output. As you are aware, agriculture is a key source, is a key contributor to the GDP of this economy, since we're an agro-based economy, and any effect on output will affect GDP. Then you also have the issue related to current developments, where the purchasing power of consumers has been affected significantly, and at the moment the rewards for labor, there have been very little adjustments, and this has also been a result of reduced capacity by companies to give those adjustments in the face of reduced volumes, which is almost a chicken and egg issue. But the companies have given partial support, which has been in the range of perhaps 30%, which we believe will mitigate these whole challenges. And also, on the other side, the increase in price levels could mitigate part of the erosion that we expect to see on the market. But our core emphasis is to push for increased production by local enterprises, be it in mining, be it in agriculture, and in manufacturing. If we all push to increase our outputs, we can mitigate that impact of the intended state of growth or recession of the economy. And part of it, I think, a significant component has to do with our moving from 1-to-1 to an open market rate, because obviously that has an effect on the computed value of the GDP, but we have. I mean, everyone knows that Zimbabwe is always called a nation of potential. The issue is, how do we do more in each day of the year that we've started? Because remember, we're talking about the year which we've just completed only the first quarter, so we've got the 3 quarters to work with. So right now, us knowing that this is the case, we mustn't continue to do business as usual. Let's do a bit more to increase production. And government, what policies can government put in place to actually promote the acceleration of industrial activity, agricultural activity, and the mining activity? So if we put our best foot forward, we certainly, was the projection are not cast in stone. They are cast in stone given the current assumptions and fundamentals. So we can certainly.
Now, to talk about, in other business news, ZSE listed contracting as well as industrial group Masimba Holdings today released financial results for the 2018 financial year, while revenue scaling 46% to $40 million from $27.5 million recorded in the previous reporting period, thanks to its firming order book. In a statement accompanying the results, Group Chairperson Grigory Sibanye said the 2018 order book was dominated by retail, commercial buildings, agriculture, mining, housing, as well as roads infrastructure projects. EBITDA increasing due to improved turnover growth as well as continued cost containment strategies. Meanwhile, the group highlighted that the commissioning of the Nyakomba irrigation infrastructure and Sawanga shopping mall projects will be completed in the second quarter of 2019. Let's just get into the financials so that you get an appreciation of how the firm has operated over the past few years. Well, this of course would be the first one, full year 2014, recording revenue of 28.18 million against a net loss position of 0.66. Net loss position worsening in 2015 to negative $1.31 million. Then they come back from the red into the black in 2016, recording 0.7 million, 1.17 million in terms of profit after tax. Then you have revenue there of 27.45, growing from 19 million in 2016, and there we have a significant jump in 2018, recording $14 million, up 46% from $27 million recorded in 2017. Then, of course, there is profit after tax of $1.69 million. EBITDA increasing due to improved turnover growth as well as continued cost containment strategies implemented by the corporation. Moving on to perhaps our next story, precious metals mining company Sibanye Stillwater, which jointly owns Mimosa with Implants, announced on Thursday that it has entered into an agreement to pre-sell gold to Citibank for $15 million. Mimosa Mining Company, which was established in the year 1926, is jointly owned by Impala Platinum and Sibanye Stillwater on a 50-50 shareholding. Mimosa is a PGM-based metal mining company located in Wedza sub-chamber of the Great Dyke, Zimbabwe. In November last year, Mimosa said it is set to increase its production to 270,000 tons per month from 230,000 tons, which the company is producing. A total of 105,000 ounces of gold have been pre-sold to Citibank at a floor price of $1,200 per ounce and a cap price of $1,323 per ounce. These ounces are scheduled for delivery during the last quarter of this year. Sibanye Stillwater said on Tuesday that it expected to report gold production of 104,000 ounces for the first quarter of this year, while equating to 90% of what was planned under the strike conditions, as well as 36% of the gold produced in the first quarter of 2018. Moving on to our next story, ZSE to start trading in ETFs. Well, of course, ETFs would be exchange traded funds. Is just to maybe also give you what would be a diagrammatic explanation or presentation of what ETFs actually are. Well, getting into ETFs, they just a bit of a situation there, but ETFs, they would be exchange traded funds, which look like a mutual fund but trades very much like a stock. To perhaps shed more light there, it then also explains how ETFs are diversified funds that trade like stocks. Well, ETFs provide other benefits in addition to lower average costs and tax efficiency. By owning an indexed stock, investors get the diversification of an index fund, as well as the ability to sell short, buy on margin, and purchase as little as one share, as there are no minimum deposit requirements. For conversation on these and other issues, I will be joined in studio by one of our very own investments analysts. Please stay tuned. Welcome back, viewers. For the news review, I'm joined in studio by Chief Analyst Respect Gwenzi. Respect, good evening and welcome to the show.
Thank you, Eben. It's always my pleasure. Good evening, viewers.
Fantastic. Let's get the ball rolling. Let's start by talking about ZSE, which says that they will start to trade in ETFs. What is the significance of that?
I think the current trading setup in Zimbabwe is such that we are only trading in vanilla stocks. If you're trading in one item, which is your basic stock trading, where you trade Delta as an independent stock, that's vanilla trading. So there hasn't been depth in terms of our markets. We only offer one instrument on the market, of which other bigger markets, they offer quite a diverse number of instruments, which include ETFs and also mutual funds that are also that are actually on certain bourses like the JSE and the London Stock Exchange. So bringing in an instrument like an ETF, it obviously increases the variety over which investors can choose. Can choose placement of their funds. But significantly, I think it's a hedge too. It's used to hedge against economic vagaries. For example, in the present setup of the economy, there has been a lot of inflationary pressure, and there's been a lot of disruptions as well in terms of company appetite to buy basic goods in the economy, and that affects profitability. So such fluctuations can be moderated by investing in an instrument like an ETF. Why? Because an ETF composes of stocks plus other instruments such as bonds. So it's basically an instrument that is used to moderate the impact of market volatilities. So if you want a defined return, a return which is moderate, and you want to preserve capital, you usually have to get into ETF. So the timing is okay. Zimbabwe is at a time where there's a lot of market fluctuations due to developments such as such as inflation and whatnot. So it's really a welcome development to the market, but significantly it deepens the kind of instruments that one can choose to invest in on the local market.
All right, I realize. Moving on to our next story, Sibanye Stillwater says that they have actually entered into an agreement to pre-sell some of its gold worth $125 million. What are the dynamics there?
Much of what Sibanye gets in terms of its gold resources is not from Zimbabwe. What it gets from Mimosa, and which is actually split in 50-50 with a joint operation with Zimplats. It's actually insignificant when you take the net from the PGM, because PGM these are four components inside their produce. So you end up getting a very insignificant figure in terms of the volumes that come from gold, specific volumes that come from the local unit. So I think it doesn't really impact much in terms of the ZIM operation. Markets are always there. If you pre-sell, you're locking yourself to a particular price. And if you lock yourself in a particular price, it means if you're anticipating that the price might actually come off, then you would have gained. But if you're anticipating that the prices might go up and you pre-sell at a lower price, it means you are bound to lose. But the impact on the local unit is not going to be as significant, because among the 4 E elements, gold is not the key mineral within the portfolio on the local side, which is the Mimosa company specifically.
And moving on to the results that have just been released there by Masimba, they're recording quite a positive in that regard, and they are coming from a position where in 2014, 2015 they have been recording losses. 2016 there's been that improvement. 2017, 2018 it seems as though there is a discernible growth pattern with regards to the profit after tax. Same can be said, of course, with regards to their revenue. If you just check how they've actually grown and registering a 46% growth between 2017 and 2018. What is your assessment with regards to the group, and what perhaps could we expect from the group going forward?
This is obviously an improved performance. It's actually a good performance by any standard. But I think if you check in terms of the company's history in the recent years, 2015, this is the year where Masimba separates Pro Plastics from its operation to become a standalone unit. So that's why you see this huge decline in revenue. Why? Because we had taken out Pro Plastics from the performance, and so after that it became a focused entity focusing on certain areas which are outside of plastic pipes and whatnot. And this has now resulted in a more leaner structure, a more dedicated approach to their business. And since then, we have seen this growth trajectory. But if you are to look specifically at the 2018 performance, I think this is quite a market-wide phenomena where we're seeing every other company reporting firm results. But if you are to look at what Masimba said to be the key drivers of his performance, this has been the retail side and commercial properties that they were tasked to construct in the period under review, specifically the Eastgate market, which was really a big project. Sawanga in Vic Falls, also quite a big project, and also the Dadvest commercial property in Harare, which are all big projects, and the one as well in Norton, the CIPF house. So I think it's leveraging from the and in properties. Basically, the property sector has been on a boom lately. Most contractors have been going on into that space, be it housing and also be it other areas of the property sector. So Masimba has been positioned to capitalize on that, and they've realized this firm growth. But getting into 2019, the dynamics are shifting. The economics of the country has shaken a bit, and most of the
talking about shifts in terms of the economy, where we are faced with a situation where there have been hints of Zimbabwe getting into a recession. You just mentioned the boom with regards to the housing sphere or the housing sector in the country. What then could we expect vis-a-vis that particular recession that Zimbabwe could actually be getting into?
Obviously, balance sheets are going down across the market, and there's definitely need for capital preservation. There's a need to slow down in terms of the growth rate. So if you're going into the contracting space, in the construction space, you have to slow down, because your balance sheet would have been affected by the shifts in currency, and the risk associated with the market as well also goes up. So you have to slow down. Your capacity actually is now constrained, and your ability to absorb risk in the market also slows down. Whereas on the other end, that's on the supply side. On the demand side, do we have companies who have got ready capital to invest in such projects? I mean, on that demand side, we also we realize a decline in demand, which we call aggregate demand. So I think all these dynamics, they definitely limit the growth potential of this very company.
Okay, now still in the same vein of Zimbabwe being in what seems to be a recession, on the economic perspective, Professor Mtuli from Bloomberg saying that Zimbabwe is going to introduce a new currency. Could you perhaps bring perspective or shed more light where that is concerned? Because I mean, Zimbabwe is, as far as the masses are concerned, RTGS has been introduced as a currency. Now the Minister of Finance coming in there to say a new currency is being introduced. Can you shed more light where that is concerned?
I feel this is just a matter of semantics. Whether when what you term a currency, it's just the technicality of it. A currency has already been introduced and is being pegged against other currencies. What has not been introduced is the hard copy form of the currency, but we readily have an electronic form of the currency, which we term the RTGS dollar, and what we don't have is the paper side of it. So what he was trying to say was to say we're going to introduce a paper currency, against what we have already introduced as a currency, but to really say that we are going to have another currency, phasing out which currency. So I think it's just a matter of semantics. But what it does, the most important thing to check with this new dynamic is the implication of introducing paper money to the economy.
Right.
When you look at the money supply, how money supply is arranged, it's M1, M2, M3. M1, it's notes and coins. M2, it's the basic deposits that can be withdrawn on demand. And the third layer is made up of instruments such as treasury bills and whatnot. So this once you introduce an M1 money, it adds to M2 and M3. Whereas presently we are operating with M2 and M3. If we add notes and coins, plus the existing bonus, or even if we phase out the 500 million bonus that are in the market and we introduce another another form of paper money, it actually inflates the whole chain of aggregate money in the economy, and that's seriously inflationary. But it depends with the magnitude of injection that they embark on. But I believe that an injection of even between 500 to 1 billion is too much, and it can actually cause the exchange rate to even plummet further. So this whole dynamics has to be looked at closely. What's the motive? Because we're already operating without hard cash. So why, would they be persuaded to want to introduce that currency, unless they possibly want to close the gap between the RTGS premium and the paper bond note and the bond note value, maybe to close that gap. But money supply is likely to go up, the exchange rate is likely to worsen if they do not curtail or if they do not contain the injection rate.
I realize. Well, thank you, Respect, for setting perspective. Well, we will take a break. When you come back, it will be time for a look at the markets. Please stay tuned.
Welcome back, viewers. I'm now joined by Anesu for markets. Good evening, Anesu, and welcome.
Good evening, Respect. How are you doing?
I'm doing just fine. Let's kick into the market. It has been quite a red day, snapping
yes.
quite a rally. Let's get to it and see what really transpired.
Well, the mining's index was the worst of all indices today, coming off 0.61% for it to settle at 192.23 points. Now, the mining's index was affected by BNC. BNC dropped about 2.5% today on its stock price. So that's pretty much what happened for the mining's index, which then pulls it back on a week-to-date basis, bringing it into the red and leaving it alone in that regard of the week-to-date basis, where the other three indices are still in the green on the week-to-date basis. The all-share index did lit up about 0.25%, while the industrials did come off 0.24%, while the top 10 index did only shed about 0.12%.
But I think there's an interesting dynamic in the market which is prevailing. Over the past few days, we've seen demand returning to the market, shares going up, and this is just a snap at the end of the week. But significantly, I think it's critical for us to point out some of those dynamics. If you look at Old Mutual and Delta, these are counters that are showing week on week surges, although today they were quite off. What has been happening is that there are foreign investors who thought the interbank would work, and so they moved their money, went into the queue, and the liquidity on the interbank market is not satisfactory, it's not satisfying, and so now they want to find their way out. How do they do it? They're getting through Old Mutual. If you see how Old Mutual has risen over the past few days, it was
quite interesting. It actually dominated values in terms of
so those are foreign participants, those are foreign investors who are failing to push their money, and they're now getting out through Old Mutual. So this is a clear indication of how investors, or basically the market, is perceiving the interbank. I mean, at the present moment, investors and the generality of Zimbabweans feel that the interbank market is not really working to their expectations. That's why we have seen a current resurge in demand, foreigners coming back to participate again, and even some of the locals as well. And it has been reflected in the rate. I'm sure we will see it as we get to that other side.
Yeah, because also that sentiment is very strong, and I agree with you very much, because we also realize that even as the week then came to a close yesterday, Old Mutual did actually come off in terms of the volumes and value that was traded, and as well the total value that was traded actually did come off. When I saw those numbers, I sort of thought probably there could be something that could be shifting the market by the end of the week. Today we actually then did realize that those numbers in terms of value actually did come off about 34%, and no, actually 60% in terms of value, while volumes came off by 34%. Now that 60% decline in value has only seen mostly Zimbabwean dominated companies like your Pro Plastics, which was actually leading in terms of values. So then it brings me to a place where I would suggest that investors probably did take a break on today, and then caused for the market to actually really come off on a harsh note, leaving the likes of Pro Plastics and other Zim dominated companies up on that scale.
I realize. I think for Pro Plastics as well, it's key to note that it's just trading beyond the closed period. I think just after your results, you are coming from your closed period. So some of the in-house trades or trades by directors of the companies, it's only allowed beyond. I mean, after the results have been announced. So they're trading in their close. I mean, they've just gone. After their closed period, and they're able now to trade. I think that would have also been the reason for those trades.
All right, we had 9 counters on either side, both laggards and winners today, from a total number of 27 counters that traded on the stock market. Citgo International Limited led the set of bulls, coming up 7.25%.
How fungible is that stock?
It has some good fungibility there. It is primarily listed on the Botswana Stock Exchange, so I'll suppose that increment there has much to do with how it's fungible and the possibility of it having further
investors
growth, moving outside of the Zim Stock Exchange into a different market. Pro Plastics, like we've already spoken about that, much to do with their closed period. Padenga did add about 1.4%. Now on the other end of the stick, African Sun did let up a huge 10.16% for it to settle at 16 cents, while Nampak and Bendura did let go of about 5.56% and 2.5% for Bendura to settle at 5.85 cents. Econet and cassava, those two are pretty much related. Econet is the parent of cassava. Cassava is a fintech aspect and side of business of Econet that was spun off in the last quarter of 2018 and has since traded on the stock market since then. It has performed pretty fairly up and down, much to do with how the market has been actually performing. Now, if we just move on to our interbank forex market, actually, the forex market has continued to weaken for it to settle at $3.16 per US dollar on the interbank rate, while the old mutual implied rate did weaken, much to do with the ZIM stock exchange on the fall, and then the parallel markets also weakened again, coming up to about $4.14.
Yeah, here in some quarters the rate was up even at 4.7 thereabout.
Yes.
What's the sentiment in the market?
I think there is much to do with probably pushing and driving their prices further up. Also, just probably they're getting into a space where it's becoming a little bit more difficult for them to have an access to the US dollar.
So you think it's a supply issue, or it's actually out of the realization that the interbank is failing to live up to its billing? Because that would be my take.
It could be a two-sided coin, because the more foreign currency that we're using currently in Zimbabwe, I would expect a wider trade balance coming for the next set of monthly stats that would come in. So it probably could be pushing the rate to weaken, but then also the issue to do with how the interbank market has been failing has a huge effect on that.
Okay, I think it would be interesting looking at the dynamics around how the trade statistics goes, because I would want to feel if we look at if we are going to check the March numbers, we last received the January numbers, right? So if we get into the Feb numbers, Feb may not be clearly reflective, but the March numbers should demonstrate. If we import 60 million and we know that the interbank is trading 2.5 a day, and we multiply that by say 20 days, which is 5 times 4, 20 days, and we see the figure maybe coming in at about 30 million. What the difference shows is that there might be some offshore trades between companies. Companies exchanging money outside of the system.
Yes.
But we also have to discount a bit in terms of government-related imports, because government is not buying from the interbank. Government is taking money through those retentions and whatnot. So we'd have to put a discount factor, and the difference should show us whether really
the offshore trading.
The offshore trades. But there should be a formula to really get down to that, because the view in the market is also that why, if we are saying that we had a nostro sitting at 600 million as of December, where is the money now, since the moratorium, 30-day moratorium has already elapsed? It's now 15 or so days beyond since it elapsed. So we should be seeing flows improving, and it's quite clear that there might be money moving somewhere outside the system. So it's important for us to check those statistics going forward.
Yeah, it will be very interesting to see how that works out. Well, that's from me and Respect on the markets. Please stay tuned. We're going to take a short break.
Welcome back, viewers, to our last segment. We'll respect what can we expect in the week to come.
Critically, it's a holiday shortened week. We're gonna have a short week breaking for the Easter holidays and so forth. Performance especially on the stock market is likely to be dampened a bit. Looking at companies, I'm sure we're gonna see more companies releasing their results. First Mutual has already hinted on that in the FMP side, so we're gonna see earnings filter in the market. But as we have discussed, 2018 earnings are quite distorted. There's a divergent approach to what government is instructed as a law to say you should report your currencies in this much. In fact, we were in a dollar economy up to end of year, and there is the standard side where accountants are saying you should have categorized your assets in such a manner. And so there's definitely going to be more results coming in, and the same issue is going to be it's going to be on the ground. We're going to see more of those results coming in constant currency, but diverging from what the PAAB or the accounting standards would have said. So that's more of what we expect in the coming weeks. And for the interbank, I'm sure my expectations is that we're likely to see more gravitation on the negative side for our local currencies. It's quite unfortunate. We start responding as well as producer prices, factoring in the new producer prices, and so it's a new wave of price increases resulting from the government's announcement at the end of the week. So it's quite a tough environment. We need to tighten our belts and see how things go.
Well, thank you, Respect, for the insight. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaxis.net. From the Equityaxis team, thank you and have a great weekend.